Thanks for coming out, and congratulations to both the Business Law Society and the Real Estate Law Society for putting this together, because I think this really illustrates the power of the education here at USC. That I think one of our great advantages of as a university is really the strength of our professional schools. And I know I've spoken with a lot of you and that encourage you to really, especially the law students, take advantage of being on a campus that has a world-class business school, a world-class film school, a world-class policy school, and do things like this. First, we have a panel, we'll use it a bit, that shows you how business and law works together, because we have half people coming from the real estate side on the business, half from the law. And also, get to know each other. That whether you're on the business side or the law side, it's important to start building your professional network. Start learning from each other. So for my students, my lawyers, right? You got to know how the MBAs in the room think. Because you want them to hire you. And you have to do what? You have to add value to them for them to do that. And you can best add value by understanding what they want out of a transaction and understanding how they work. And for my friends from Marshall, right, get to know the law students, because they can actually help you succeed in your business. That involving lawyers at the right time in a proactive manner actually can help deals go smoother and more effectively. And to the extent that you guys can learn to partner while you're here in law school, both of you are going to have that much of a competitive advantage when you leave law school and go out in the real world. So I know you didn't come to hear me talk on, so let me just introduce the panel that we have today. I love how they arranged this. You know, we've got the two lawyers flanking. Maybe you guys don't want to run for the exits or something like that. Okay. So first, I'll start with Gary. We have Gary McKitterick. Gary is a partner at Matkins. He is one of the leading real estate lawyers in our state. He has an extensive career in real estate, putting deals together, working on debt restructuring. And I'd like to thank Gary for coming with us today. Next to Gary, we have Brad Hillgren, our first business guy. I got to say this, Brad's a double Trojan. Got his undergraduate and MBA here at USC. And Brad is a principal and the founder of Rhodes, which is an investment vehicle that looks for strategic opportunities in the real estate space. So Brad, thank you for coming as well. Next to Brad, we have, I forgot Bruce's last name. McDonald. Bruce McDonald. Bruce is managing director at the DEXUS property group. Like Brad, he has extensive experience in the real estate space, and again, even though he's not a Trojan by birth, he's gracious enough to come and join us today. And finally, we have, at the other end, we have Mike Alvarado, and Mike is the general counsel and secretary for 5 Point Communities. And with that, he engages in all the outside activities for the community. So rather than me talk more about them, let's turn it over to them and hear what they have to say. You know, is Gary, you starting us off?
I'll start off.
Okay, thanks, Gary.
There we go. I'll try this just so you can hear. My name is Gary McKitterick. So what we're going to do today, the reason that two business people are in the middle is because without them, I don't have a job. So the dean could not be more accurate. That well, first of all, let me take a look. How many business students do we have? Hands? Okay, terrific. We're going to have a lot of business issues. Masters in real estate or others? Any? One, kind of? And the rest law students, I'm assuming. Okay. So we're going to speak to both of those. We're going to get into some deal specifics. We're going to tell you what we do, why we do it. The one thing I did, I thought would be helpful just to orient you just for a couple of minutes. What does it take? So the slide here is how lawyers and business principals navigate a deal. So I put together a slide which could have added 20 more boxes. But what you're seeing here is on the top line, how does a piece of dirt become a building? Under the middle line, without money, it's only a vision. And under the bottom, for you law students, you have different classes you can take. How do they work together? When are they used? What are they for? That's what that bottom wall is. So what you'll see in your immediate orientation is how many different specialties there are in transactional real estate. So I want to give you an anecdote that in law school there are choices. Many of you come in thinking, certainly I did, I went to law school thinking I was going to be the next great litigator. Went in, how did I become a real estate lawyer? I did it by process of elimination. Okay? It was a very strategic thing. I don't want to do this, I don't want to do this. And, what was left? It was that or a gas station attendant in Bakersfield. So, I was trying to work through. But transactional real estate is something that ultimately I ended up on. The amount of time I've been in court is 1 time as a lawyer. So I don't, when you realize what transactional lawyers do, there are areas other than court. So let me tell you a little bit about myself, and I'm going to turn over and we're going to go through some projects, some interactions. I'm a partner at the law firm of Matkins. We've got 220 lawyers, so depending upon your perspective, that could be small, medium, or large. We have 6 offices in California. Of our 220 lawyers, about 100 of them do something that deals with real estate. Real estate tax. You look at all these specialties, we have somebody that does something in those categories. I myself have described my practices. I follow the money. So what I've done through my career is to watch real estate cycles and watch what clients do and learn about them. I'm going to leave you with 2 things that I want to get into our panel real quick. We're real privileged. This group of folks here I've worked with for my career. They're both friends and they are clients, and we're real privileged to have them. Collectively, just to give you a feel, this group has done in excess of $15 billion worth of real estate. Okay? So it's a lot. Transactions from small to large. The perspective that we'll have is different. Mike's a general counsel. Mike was a partner of mine at Matkins, and he'll talk a little bit more about that. He's a general counsel now at an extremely high profile and busy company, so we'll give you a little perspective. Bruce and I have done a lot of development together, solved a lot of problems, did a lot of arm wrestling together, and we'll talk about it. Brad and I are both friends and business associates, and Brad's had a terrific career, which he'll tell you a little bit about. I want to turn it over to them, and for the business side, and you lawyers, as one bit of information, business matters. And how you view and how you understand what your clients do, and we'll come back to that, will make you a better lawyer. So with that, I'm going to turn it over to Brad Hillgren and learn a little bit about some projects.
Thank you, Gary. And I can tell you, it's nice to be back in my alma mater and to be with you all. You're going to find a distinct difference between the business guy and the legal guy. My charts look nothing like this. The fundamental business or distinction through 2. Do I have to do 2?
Go through 2 more. We'll come back to that.
I deal with pictures. And guys like Gary have to figure out how to turn those pictures into documents that can actually stand the test of time, and there's a big difference. And great lawyering makes that happen. So, quick look at my career from USC. And the first thing I did I was just sharing with Katie McKitterick, the best job I ever had was actually here at USC. I was the head bartender for the university. So all of the events that happen on campus on Saturdays, they've gotten bigger than when I was here 30 years ago, hard to imagine. But I had the opportunity to grow them, so it was a fabulous experience, and not in learning how to make every cocktail known to man, but most importantly was the connections that I made. And if there's one thing that I think your professor was sharing with you that is really critical, is the connections and the opportunities that come out of this university are so rich. And so take advantage of them, because that job tending bar here at USC has led me through lots of different adventures along the way. So after walking in my red gown, I joined Cushman & Wakefield, which is a national brokerage company. They didn't have a Master's of Real Estate Development, or really any real estate development courses at USC at the time. And so I had this dream of being a developer, but I had no idea what that meant or what that entailed or what that required. And so I came out with my degree and had no place to go other than in brokerage, which was a super opportunity to really learn about the market and understand how value is created through lease transactions and through sale transactions, and where you can really actually make a dollar in real estate. And if you can't make a dollar, as Gary suggested, you're not going to be able to attract the money. And so it was a really helpful 5 years for me to understand the basics of real estate. And I had the opportunity while I was at Cushman & Wakefield to do a number of transactions with a firm named Low Enterprises. Low Enterprises I joined and anticipated being there for about 2 years, 3 years to really kind of round out my development skills and then become a developer. 21 years later, I left after being the CEO and running a national real estate practice. That included investment management, which, to break that down, is we represented a significant number of capital sources, pension funds, high net worth individuals, private equity shops to invest in real estate in markets around the country in a variety of different product types: office, industrial, retail, multifamily fell underneath my team's area of responsibility. We were vertically integrated, so we looked for and found investment opportunities. We managed them at the property level. We provided asset management services. We provided construction management and leasing services, and ultimately disposed of them. So we ran the full gamut of operations for commercial properties. We were talking about this firm in past tense. It is a firm that continues to operate to this day. It's a fabulous organization based in West Los Angeles. Companies involved in development activities. We did quite a few large build-to-suit transactions as well as speculative developments around the United States. And 5 years ago, I left to take advantage of a really terrific real estate market to start investment. And what I've learned is, I think entrepreneur is French for underemployed or unemployed, because the MBA will work for food is awfully close to where each day is as a two-man shop working in Orange County. A couple of quick projects that we've been involved in. So I said I work with pictures, and Professor Lutko has seen this slide, because I used to come to the law school 20 plus years ago when we were doing a project in Orange County. And when I first saw this slide, I thought, okay, you must have to work through a lot of BS to try and actually get a stake out of a real estate deal. But the reality is, we used this slide as a presentation to the school district in the city of Brea. It was a school district that had an aging high school. In fact, it was about 100 years old. And it was developed in an area that was primarily agricultural and oil back in 100 years ago. And they had this high school that was dated and needed to figure out how to upgrade their facility. So we actually went to them with a plan that traded their property, where they had their 4-H club program, if you can imagine such a thing. And we shared with them that this beef was worth about $1,000 a pound. And so we came up with a really interesting project, which was a public-private venture with the local school district and the local redevelopment agency. That's something that they used to have that were quite helpful in real estate. And we created, out of a $15 million piece of real estate and a $35 million high school through some very creative financing and development. Don't know if you can see on this aerial, but the Brea Mall is right to the left side of the aerial. Our project was everything to the right. And on that site, over the course of about 15 years, we developed office buildings, retail centers, hotels, and so forth that creatively put together for the city of Brea and the local school district the financing to help them build a brand new high school. So fun, great, exciting. It was one of those things that really made me passionate about real estate and what can occur when you work smartly with the local jurisdiction and with some really creative capital. I thought when I got into development it was simple. Buy a piece of property, so you got a purchase and sale agreement. You hire an architect, so you got a service contract to work on some design. You put together a construction agreement and you go and get some financing. You do a few leases. At the end of the day, you sell it. Purchase and sale agreement. Pretty simple. I learned on this project how complex real estate can be, particularly when you're working in a public-private arrangement. This had owner participation agreements where we were involved in participating in sales tax revenues, in property tax revenues. Instead of a purchase and sale agreement on the land, it included ground leases, and there was participation arrangements in the ground leases. So people that owned the property below us, which was effectively a financing arrangement, participated in our revenues. We were guarantors, but we actually had to arrange to bring in a financier to provide a guarantee for certificates of participation, which are bonds, which were floated in the public market. So we had to go through the underwriting to make sure that those were backstopped by this project. We had to go through, well, let's see, I learned about Chapter 7, I learned about Chapter 11. Fortunately, none of those related to us, but tenants that happened to anchor tenants that we had as part of our retail center. And so working through those kinds of issues, lots of fun. So the attorneys, I encourage you to learn about the business side of it because it is quite impactful. Business guys and gals, learn about the legal issues because you will be wrestling with them day in and day out. Just some other projects we've been involved with that you might have seen. 405 Freeway at the Howard Youth Center, we did a project with Arden Realty where we developed the office component of that during the last upswing. So the lesson there is cycles, beware of cycles and what can happen in cycles. The next project is a mixed-use property that we developed in the District of Columbia. So not far from our nation's capital. This was a project that was a redevelopment agency project in that city. Some of the things we learned were just having a good project isn't enough. You need to have great alliances. And so this was an area that the city wanted to redevelop. But for us to be successful in winning that opportunity, we had to create an alliance of local associations. So it's about creating jobs, but it's creating jobs for and with the right people. So it took building some bridges. We ultimately won this assignment. And the complexity of this is 4 levels of subterranean parking that take up an entire city block and then an adjacent half of the block. 2 levels of retail. So we have a supermarket, a variety of different retail uses on the ground floor, service and other retail on the second floor. And then there are 3 towers that rise above it. 2 that were for lease or apartment buildings. 1 that was condominium or for sale. So a lot of complex uses that came together that on the lawyering part of, as developers put together these nice pictures and say everybody's going to live and work well together, but it's quite complex at the end of the day. So we've got different uses, different hours, you've got issues related to restaurants and so forth that create smells and bugs and all the things that the residents aren't too happy about. And you need to not only figure it out from a design and operational point of view, you need a lawyer as well. So very complex, lots of fun, interesting. Projects like this take a decade. We go through a couple of cycles. Sometimes you win, sometimes you don't. Parts of this project won, some did not financially. What we're working on today is a project here in the city of Los Angeles. It's actually the East San Fernando Valley, North Hollywood. It's a mixed-use project that redevelopment agency and developer have worked on for a better part of a decade. Our client acquired the note foreclosed on it and is now in the process of working with us to develop a plan that this is looking at it from two different views. This is, for those of you who know the Valley, Laurel Canyon Boulevard and Victory, right on the 170 freeway. So that is the Valley Plaza. Will be a mix of uses that will include about 250,000 square feet of retail, about 350 apartment units, and we have to work around existing uses that include in-place retail and office buildings that are all part of this master association that we need to first unwind and then put back together. So complex, fun, interesting. Spent a lot of time with Gary, and now turn it back to you. Thanks.
Thank you.
Thanks, Gary. Let me see if I get the screen set. There we go. How is everybody? I'm Bruce McDonald, and I'm with DEXUS Property Group. Can anybody guess? Is this on? Can you hear me? Anybody guess where this is? You got that right. I sold my company, DEXUS Property Group, 3 years ago, my operating company. And it looks shiny and glitzy, this picture, because we are the largest owner of office buildings in Australia. And I'm an industrial guy, so we have a major presence here in the United States, which is all industrial. So DEXUS is a $13 billion publicly held REIT. I think you all know what a REIT is. I run our group here in the United States, which is all industrial. So what I'd like to do is give you just a quick overview of what I want to talk about today, but really get into some lessons that I have learned throughout my career in industrial real estate over 35 years. I want to review my background because I really would like to relate to you how I got hooked into my business and who helped me along the way, and in particular some lessons that I want to give an example of a project I recently did, which is the last project my company did, finished in 2011, that really emulates a lot of the takeaways I'd like you to grab from today's session. So, construction. This is a picture of a significant sized project. It was the largest project built in Southern California industrially over the last 3 years until we started our recovery period in 2011. This is a picture during 2010, and it's a build-a-suit for Walmart. I began my career as a carpenter, concrete carpenter, after an undergraduate degree from Stanford with a major in biological science. I was going to business school at night at Cal State Fullerton, and I was working in the field. I became a construction superintendent, and I really was enamored with creating value. Subsequent to that, I had a great mentor. And everybody in this room should know that you don't get anywhere without someone else teaching you. And that was my dad. And so what he taught me was finance. When I merged construction with finance, I really was engaged to the game of creating real estate value rather than just investing in it. And that's a key thing. You can create value by making a good investment, but you really create value, although the risk margin goes way up when you get into the development business. So my whole career has been living on the risk edge, involved in the development business. And as an analogy, what I'd like to tell you about the development business so you can understand it, because in order to go through the whole cycle of it, it's not quick, it's not easy, it's truly like a marathon. It's very exciting at the beginning because you make a deal, right? And then it's painful because you get all these variables that enter your life. You thought you had them all figured out. But unfortunately, our business has so many unknowns, you get hit with body blows continually. And then once you catch your stride, you enter more risks. And when you finally finish, you need patience, you need endurance, and you need stick-to-itiveness. And you also have to surround yourself with great consultants, like lawyers, like good architects, like people who doubt what you're doing, who are always questioning what you're doing. I'll get back to that in a second. But above all, when you're done, the problem with development, it's addictive. And when you're done with the marathon, it's the same thing, you want to do another one. So that's the trouble. You always think you can repeat success, or your failures, you want to correct them and go after them and make a difference the next go around. So the picture I just showed you is the project that we want to talk about today quickly. It's a specialized freezer. It was the largest freezer built in the United States ever. It's minus 10 degrees. It's 25 acres. It's in Riverside, California. And it's 5 football fields under one roof. And it's 40-foot clear inside. Highly specialized. It's not your normal building. It doesn't look pretty like Brad's pictures. But I have to tell you, it is very complicated to deliver something like this in budget. Here were the people involved. MDC was my former company for 15 years. We thought we had a lot of experience in the business. We built 200 buildings, about $1 billion in value. I did it with institutional partners. And approximately 35 projects over 15 years of work. This was the last project we did, the Walmart freezer. And no matter what you know in development, you really test it each and every time you do the next one, because they're all different. There's no formula, there's no prototype. We hung with some pretty good people in here. That we had GE and USA as our investors, pretty cachet names, right? We'd done business with them before. We had 3 banks that were involved in this project, B of A Guarantee Bank and BBB Compass. You think they know what they're doing too, right? And then we chased down some really big corporate names from Volkswagen, Counsel and Cook. These are household names, Dole Pineapple. And then finally Walmart, we signed a lease with. All these guys looked at this project with us, and every instance where you think you've got the right formula of the players involved, from the investors to the banks to the prospective tenants, there's so many unknowns that hit that the lessons today that I want to go through with you, they're right here on this screen. Now this is really important. In my business, and in any business you get into, there's going to be the champion of the idea, right? The guy or the woman is emotionally connected to, we got to do this. We got to go out for pizza in this movie, right? Is everybody with me? And the problem is when the markets are really frothy. What I mean by that, rents are high. Record sales prices are going down. Capital is easy. For a month if you borrow, right? When that happens, the champion needs to have a robust team around it. A lawyer who's saying, now Bruce, have you thought about this? Now, despite all of that, what happens in a great market, the champions prevail. Because people just get dragged in. Even at great board meetings in Wall Street, people know they shouldn't be moving in one direction, but when everybody wants to move, it's sort of like, you know, the tail wagging the dog. You got to watch for the champion. The next is assumptions. Never ever do a development unless you evaluate the downside. Look at the assumptions from the worst case, because if you can't stomach that result, you should not move forward with any confidence in the development. So assumptions are key. The downside return is going to keep everybody honest. Next is risk. There's endless risks, from a cute little owl that lives under the sidewalk, or you could have change of your planner in the city you'd worked 2 years with, and now you're starting all over again. She takes a better job, you got somebody else has no background of all the sweat and equity you put in time to get a project approved. You could have city council political change. You could have capital markets change. Look at all the risks entirely. And the problem with risk is, if you don't have a long period of time to evaluate it, you're going to make mistakes. Developers make mistakes all the time because they're in a rush. Money's burning. Finally, evaluate the capital markets. What I mean by that is, if you apply leverage in our world of finance, there's so many tricky ways to finance a project. If you apply debt or mezzanine debt, you've heard of all these terms, as opposed to, if you look at investment on an all-cash basis, it's going to keep the investment pure as an apples-to-apples analysis when you look back at other projects you've done. So evaluate a baseline test always on an unleveraged basis. But the thing I want you to think about today that I continue to push for is, don't pick the deal that has the best economic returns. You pick the people. And that is the big bonus in my message to you. If you're not surrounding yourself by the people you trust, by the people that you have done business before or other people have, you're going to cut yourself short doing business with people just because they have a better deal for you, whether it's a bank or an investor or a tenant. So that is the message, is relationships are everything in our business. I think it's consistent with any business, and don't forget about them. Now, the project we did had quite a saga, and this is an interesting quick slide, but I just want to go through it with you very fast. On the upper left is where it started. We were building a spec warehouse building where the Walmart freezer ultimately ended up. And this is when the market was great. $43 million of capital, only financed with 10% of equity. The equity is shown in the green-blue, and the orange and rust colors are the debt piece. Look what happens here. We do this in 2007. We stop work halfway through construction. Market vacancies go from 3% to 20% in industrial and the Inland Empire. We stop. We spent $23 million. And the bank says you can't stop. You have to keep building. I'm personally guaranteeing the loan. Then we restructure our capital and put more money in, try to convince the bank and everybody that we should keep proceeding at some point. And my bank goes broke. Biggest bank in Dallas, Texas, biggest bank in Texas, Guarantee Bank, $15 billion bank gets taken over by the FDIC. It's pretty stressful, right? Now, what happens is we buckle up, we buy out GE, a partner who I had in 5 different deals who trusted me to say, Bruce, we can't stomach this, we'll let you buy us out. I bring in another partner, USAA, which is the highest rated financial institution in the country. They're out of San Antonio, Texas. And we finance this building all cash. Remember when I talked about unleveraged? So in the worst of times, we should have been looking at this option. And look how much the capital goes from 43 million now up to 67 million. That's not small change. So Walmart signs a 15-year lease with us. We buy out USA. I pay off the loan. And away we go with a very complicated project. Now let me talk about surrounding yourself with good people. It sounds good to sign a lease with Walmart, but unless you have a lawyer that can negotiate an airtight contract, construction contract, that you can educate your lawyer where the construction issues are, and then he can document it tightly, that project at $67 million could blow to $75 million like that. So fortunately, Gary and I worked together to lock down a great contract with a fantastic contractor who I'd known for a long time and trusted. And Walmart insisted we use their lease form. That's a trap door. You've got to have people who are going to protect you, because when you build a building for a specific purpose, and if Walmart at the end of the day says you didn't build it right, we're not moving in, what do you got? You have a disaster. You have a disaster. So what happened? The victory picture. We built it for $67 million over a 4-year period. There were dramatic swings. We sold it for $92 million a month after Walmart moved in. It was a record profit in a recession, $25 million in aggregate profit. I'm here to tell you that if you ran an IRR on this, it would be off the charts and ludicrous to even look at that. What's important is we underwrote this on a 9.2, all cash on cash yield, unleveraged. We sold it at a 6.8. That's, you don't get spreads like that, but we worked hard. We took enormous risk. At the end of the day, let's go back to the issues. Champion. There was a champion here. Guess who that was? I drove the project so hard during the height of the market, where we lived on the edge when markets turned on. So it wasn't my fault Lehman collapsed, but I had to deal with it, but I didn't see it coming. Fortunately, fortunately we worked through that because we fought our way to find the right tenant. And there was only one tenant in the market at the time. The other thing, I had a bank go broke on me. But the bank trusted me to give me enough time to buy them out. And during all that time, I had time to figure out how to minimize the construction cost escalation and pricing, how to get back through the city. And remember I talked about risk. The more time you have, you can reduce your risk. So that helped me too. So at the end of the day, I have to tell you one thing about real estate. And we talked about some of these things: champion, risk, assumptions, relationships. In development, and I've done a lot of it, you either make money or you lose money. Imagine that concept. You never break even. You never do. And if a developer ever says he broke even, he's not a developer. So I'm passionate about what I do. I think you can tell that. And I'm happy to be here, and I look forward to any questions. Thank you.
Well, to start with a little background quickly, I joined Gary at Matkins in '92, and the reason Gary never went to court, but for one day, is because the day after I was admitted to the bar, I went to court with Gary. so that's how that works. So I started in the last real estate recession, and at the time I was one of 2 real estate lawyers hired at a firm known for real estate. And it was a painful first couple of years. We were fortunate enough to have a lot of financial institutions, banks, and life companies that had real estate secured loans. And so I started in the world of loan restructures, which was a phenomenal experience for a real estate lawyer. Typically, as a real estate lawyer, you come in and you're doing leases or purchasing sales or development type documents, whether it's a construction agreement or an architect's agreement. I came in and started reading loan documents on big office buildings and industrial buildings and retail centers that the owner of the property weren't paying their loans anymore. Their tenants had either gone bankrupt or left, and they were in dire straits, and a lot of our clients either own those buildings or had loans on those buildings. And for me, learning that kind of real estate finance side right out of the gate, and for a number of years, was invaluable, and really was a phenomenal foundation for me as a real estate lawyer. If you don't understand real estate finance, then you will never be a great real estate transaction or development lawyer, because you really need to have that fundamental foundation of how your clients are looking at the deals, either from inception of bringing equity and debt into the deal, or when times get tough, learning how to restructure deals. So for me, that was a great foundation. From that, I became a transactional lawyer in the real estate arena. I was buying land and representing clients buying land and selling land, and buying buildings, selling buildings, and financing the same, and across all product types: industrial, office, retail, representing home builders, buying land to build homes. So I was fortunate to really kind of run across the spectrum of product type and transaction type. And for me, that was, as a lawyer, critical. I did not want to be a leasing lawyer where every day I'm coming in, I'm negotiating my 50th Walmart lease or my 150th office lease. It was invaluable experience to do all of that and to do it repetitively, so you became really good at it. And you can take those lessons and then to other aspects of the real estate practice. But for me, it was not something I wanted to do over and over again. So I was with Gary at Matkins for almost 20 years, and a year ago this past July, I decided to jump ship and go in-house to a land development company called 5 Communities. And for me, I had several opportunities, other clients throughout the years that had approached me to come in-house and join them as an in-house lawyer, and it was never sounded appealing to me. This opportunity was different. It was one where it was going to be incredibly unique in terms of the diversity of the experience and the type of work our company is doing, which I'll get into in a minute. But for me, it was going to be important as an in-house counsel to have a real broad range of issues and things that we're working on a daily basis. Because again, doing the repetitive thing over and over again just would not be appealing. So I joined 5 Communities as a land development company. And as a broad map, what we generally do is we look at big master plan communities, and we have 5 projects right now, 2 of which I'll touch on. Newhall Ranch, Valencia, up in northern LA County, and in Orange County, a project called Heritage Fields, El Toro. It's the former El Toro Marine Base, now branded. It's now called Great Park Neighborhoods. It's been in the front page of the LA Times a few times in the last few weeks and months, and there's a lot of politics going on, which I'll talk about. But we're land developers. So what we do is we entitle these master plan communities with a mixed range of uses, residential, and then a wide range of non-residential development. So we're the ones going to the city council hearings or the county board of supervisors requesting approvals to build a project that our land planners and our visionaries have envisioned for large areas of land. And it's a painful, brutal process sometimes, and sometimes it goes great, but generally speaking in California, land development is painful. You're dealing with not only policymakers and trying to get them to understand and see your vision of the projects, but you're also dealing with going through California's Environmental Quality Act, CEQA, EIRs, and we're embroiled in 3 pretty significant lawsuits on our EIRs on our New Hall Ranch project these days. So we will, yes, once we get through the approvals, we then go into land development. So we'll mass grade the areas that we're ultimately going to sell to home builders or to commercial developers or users. And we put all the streets and utilities in. We get, in most of the projects of this scale, you need public financing. So if you've heard of Melrose districts, CFDs, we'll bring in that kind of structure to help finance our projects. New Hall Ranch will have $2 billion of infrastructure alone. The Great Park neighborhoods will have close to $1 billion of infrastructure. That's a lot of dirt to be moved and utilities to be put in. And you bring the finance experts in, and you bring the construction experts in, and you have this great landfill and then launch. And so we, for example, in our Great Park neighborhoods, we're getting ready to sell our first home sites to home builders. And we'll be selling to them as early as starting next week. And so we'll have 726 home sites broken into 10 different neighborhoods or villages. And what we've done is we have the architecture ready for those 10 neighborhoods, and we will have an auction. And we'll have private home builders and public home builders coming in to have the opportunity to be the home builder for these 10 neighborhoods. So it's an exciting process, sometimes painful process and frustrating process. And it's been an interesting process for me going from outside counsel, where I was more of a, what I call a kind of a subject matter expert, dealing with various things in real estate that I did. I was recently reminded now when I introduced myself, we had a function in Irvine, and we were talking with the city council members. And I said, well, you know, I'm now at 5 Point Communities, I'm their general counsel. And he looked at me and said, you're not special counsel. I said, that's right, I'm not. And you become a jack of all trades real quickly. I'm now dealing with stuff that I haven't dealt with for almost 20 years of practice. Dealing with labor and employment issues, dealing with corporate governance issues, dealing with environmental issues, and dealing with a host of other general litigation matters that I had some experience with, but not at the depth and level that I do now, where I'm the first phone call for everybody. And when you move from outside counsel to in-house counsel, my clients are no longer firms like Brad and Bruce's firms. My clients are now my business partners inside our own company. And you really need to treat them that way. They're not lawyers, and the reason they're walking down the hall to talk to you, or they're picking up the phone to call you, is because they need help. And usually they need help, and they need it right away, just like a client in an outside law firm does. So I've got a lot of clients now, but they're all inside my 4 walls of our offices. So it's been a fun ride, and I've got a lot of years ahead of us, and you'll hopefully be reading and seeing more about our projects as we go along. And the Great Park neighborhoods, hopefully we'll be able to be building a big park for the city here that'll be twice the size of Central Park in New York. And at New Hall, we're going to battle through a few more CEQA lawsuits and then get some great land development around that too. For just geographically, at New Hall Ranch, for those who are maybe not familiar with the area, if anybody's driven up the I-5 corridor towards Magic Mountain, it's the area both on the east and west of that Magic Mountain area. So that's my spiel, and appreciate being here.
It looks like a lot of you are going to have class, so I'm going to go quickly through a couple of things. Those of you who stay will answer a couple of questions. You've seen a great explanation of different aspects of the real estate market. I want to focus you on one chart right here, which is from Wells Fargo Bank. And just look at the difference between 2007 and 2008. You've probably seen this in your finance class. This is CMBS debt. It's a type of debt. So what you saw was $230 billion worth of debt that went down to $12 billion. We're now maybe going to be back to $40 billion in 2012. When you talk about recession, when you talk about what happened to capital markets, this is something to keep in mind. It drives some of the things. I want to show you one more. This was one I found yesterday. I actually was looking This is a survey of bank, the Comptroller General. Now, what I want to focus you on is eased, unchanged, and tightened. These are underwriting issues. How did banks perceive risk? Okay, 2007, you had 28% of the banks easing credit. You had 59 unchanged. You only had 13 that tightened. If you follow in the next 2 years, you had 49% that tightened. In 2009, 80% of all institutions tightened their underwriting standards. The next year, 2010, 72%. Okay? So I just wanted to give you this perspective, is that the finance matters. How you access capital matters. It's in your take the finance classes, understand them, try to do what you can to understand trends, because it'll matter as if you lawyers are in transactional. You need to understand the money. I'm going to go to one slide because it's lawyer focused and it's business focused. What are the skills? Okay. You've got a lot of skills. These are, there's a lot that you can do, but I want you to focus. Here's the business. You've seen our business guy with Brad and Bruce. What is it? Vision. Vision's important. Persistence, Bruce talked about it. Detail. Okay? You can't fly 30,000 feet and make money. You can sometimes. You can be a little bit, but you're not going to do it in a tough market. You got a plan. And what do you need? You need capital. Now, what do you really need? You need a good lawyer. So, okay. So that I had to put in that for you law students, all right? So what do the lawyers need, right? What kind of skills do you guys need? All right? Detailed review of language. All right? You need to read detail. The word not in a sentence matters. All right? I've got a great story. It's too long, but I'll tell you later. I'll tell you real quick. I'm a first-year associate. I draft a document, and it's in the days before computers. We actually still had selectric typewriters. We had some other stuff, different time. But literally, we retyped a page, and the word not got dropped in a document that was pretty important. I'm a first-year associate, right? Partner says, are we all good? I looked at the last draft, I sent it out, and of course, being a nervous first-year associate, I read my document again, and I read it again, and I go, oh my goodness. Okay, so I was on the phone very quickly and said, please, that document's not delivered, we're going to have to go through that. So your offer acceptance, all those kind of things you learn in contracts, it's written. Great communication, okay? Listen well. Your clients will tell you what's important to them. You need to listen. Write clearly. Long sentences, compound sentences. The best thing that you can do is to say, what can I take out of what I just wrote? Understanding the client's business. Why is that? For risk tolerance. What's important? Every client's going to be different. A deal requires compromise. It's not winner take all. So this is going to be my 2 cents to you lawyers who I'll be out there competing with in the future. And just some sage advice. If you burn bridges, you're successful once. Okay? The TV shows that show people pounding on tables and walking out of meetings and, everybody go, God, isn't that awesome? They were just like, that was just great. That's the last deal that person does. And I will tell you, in the real estate community, it's small. It's small. And reputation matters. What do you need? A good client with capital. Okay? So you have to do all those things and get a good client with capital. I'm going to end with that. I know we've got this room for a couple more minutes. These are extremely talented folks. If you've got questions, we'll field a couple. Please.
I'm just curious about how you would say that evolving technology has changed the work you do, both from the perspective of the tools that you use and the content of the deals that you do over the past 5 years, and which ways you expect it to change in the near future.
Okay. What do you guys?
I can say from the lawyer's perspective,
it's not so much in the last 5 years, but certainly maybe the last 10. The advent of the software, the legal documents, whether it's your iPhone, whatever your smartphone is of choice, there is constant communication. And probably the two biggest challenges are now, particularly when, it almost doesn't matter market conditions, going well or going crappy, people want things done fast. And the biggest challenge technologically is doing things too fast and not doing them right. And that's a constant thing that we're, back in my old firm and now with my business partners, don't fire out that email with that response because somebody's counting on you if it's going to be wrong. Take the extra few minutes or the extra few hours to get it right, because once it's out there, it's almost impossible to retrieve. So that's been a big challenge.
I would say one thing that I would that we've seen in that transition. You do everything on your screens. You're used to just looking at screens. I emphasize what Mike said. Take some time, maybe even print out a hard. It's going to sound like, yes, I am old, so it's the way I do it. But I mean, looking at something and reading it again, because you're so used to looking at screens. I think that the probably sometimes the quality suffers a little bit with young associates who are just used to doing it that way. But technology is driven. I'll tell you where technology is driven from a real estate perspective is how space is used. So,
one thing about technology is the construction materials are changing quickly, and the innovation where you take an old idea and you just make it better. Corporate America is really interested in seeing energy efficiency, and it's from these lights here to glazing to hard materials you walk on. All those things are changing right now, and actually cost effective too, both from use and from a purchase standpoint, the more durable. So that technology is really good in the development side right now, and it's getting a lot of people's attention. They'd rather be in a building that has the highest innovative materials as opposed to the cheapest rent, which is interesting. That's cool.
another question? Yes.
I have a question in regards to some of the long-term development deals. How difficult is it to, deal with investors that are kind of requiring a return, or a partner in some respect where the time horizon is so long and maybe things aren't really going smoothly through the process? I mean, how do you, especially if you're a champion on the project, like how difficult is it, and how do you appease some of the providers of capital?
I'll take a shot at that. We never had a problem with any investor over the course of I think you heard consistently that relationships matter, and how you deal with people matters. And so going into a project, generally as a champion, you are sponsoring an idea, and you are inviting someone to invest their capital into a project over some term. Bruce talked about the need to underwrite and exhibit the downside and what can happen to that capital. So part of the story is, look, I want to invite you in because this is going to be a great opportunity, but to become a really good partner, you need to share with them, but here are the real risks. And it's demonstrating your knowledge of what can happen to this project and their capital along the way that has that capital say, I'm comfortable with you as a steward of my money. And knowing that, because capital is smarter than any developer, and it's been through more cycles than we have been. And they're going to know that this project is not going to go in accordance with a pro forma. It is going to vary because life happens. And they want to know that you can navigate life happening along the way and what you will do with it. Once you get that framework in place, then you work with great guys like this that then craft the agreement that at the end of the day, you hope you don't have to use. Because at the end of the day, or along the way, when stuff happens, you want to be able to sit down in a meeting with someone and say, here's what's going on. And be able to work it out. If you have to go back to the clause that Gary negotiated, your deal's probably blown up to a point where it's not going to be fun.
I want to ask you guys with the development deals, especially small developers. So the clients you get before you build, you arrange with them, or is it after you build, just try to bring hotels or just warehouses as well? You just build it and then you try to market it, or does it work else?
Well, there's in my business, there's two kinds of development products. There's spec, where you build it and they will come. And that's been my world for so many years. And if you're fortunate enough to have the tenant sign before you build it, you've reduced a lot of market risk of securing occupancy in your rent stream. So there's one or the other. It's very rare that you have a property, an industrial property free-leased. Office and hotel, I think it's a lot different. Many times office buildings are leased before they're built, and hotels obviously are driven by a whole different finance scheme that I'm not familiar with.
For hotels, part of it is the operator, and is the operator who is involved. Like, so you'll see a hotel, Four Seasons as an example. Four Seasons is generally not the owner. They are just the operator. So as a developer, you are going out and you are trying to position a piece of property and trying to put the right hotel in place that will attract people to stay there. Part of that is the design and location and all those things that you do in real estate. Part of it is the operator, because they attract people. And that combination, if you can put it all together, will attract capital that will support it and sponsor it. And then you hope and pray that it all works. But you have to put all those ingredients in place up front. It's rare that you go, I don't know anybody who would go build a hotel and then say, well, maybe I'll figure out who to have operate it. That's all part of the mix as you're conceiving the project.
So I think we've got to vacate the room, so.
Gary, can I add one
yeah,
thing?
Please.
To lawyers in this room, future aspiring lawyers. I was at an architectural conference 2 weeks ago, and I had an architect, a worldwide known architect, tell the audience that they're losing engagement with owners, and it really frustrates the architect that the owners aren't as engaged in the projects as they used to be. And I have to tell you, from a developer standpoint, I'm pretty old school. I read every document. And a lot of guys my age say, well, no, I don't read documents anymore. I don't read legal documents anymore. And the reason why I read them is I would keep learning, but I want to engage with our lawyer, because our lawyers are teachers to their client, and clients are teachers to their lawyers. And if you're not engaged in reading the material, you're not going to have fun, number one. And number two, you do learn from each other. And I would encourage all of you to just always assume that you want the client that's the reader and the teacher, because both sides, it's a lot of symbiosis. It's very reciprocating, and it's fun if you've got lawyers and clients engaged in the documents themselves. And maybe it may sound like a lot of minutiae, but every document gets that much better every time you read it.
Yeah, that's true. Any last thing, advice, Mike, just kind of.
Actually, you just ended on the same thing that I've been preaching to all my business associates in our company. I've been telling all of them, because these projects are pretty big, and I have a roster of outside attorneys that are 10 pages long. And my big statement to them has been for the last few weeks, if you don't read the documents, don't put them in front of me to approve them. Because you need to have read them first and understand exactly what's in them. Because as the business person, they have so much more knowledge about the project than their outside counsel does. So that's actually a great compliment.
Thank you.
I'll finish on that. I think that's wise counsel. Real estate is a team sport. And as a developer, you are limited by your time and capital as to how many deals you can do. And you have the opportunity to work with some of the best and brightest consultants of all types. And they're the ones that are involved in a myriad of transactions. And the more that you can bring their knowledge base to your specific opportunity, the better it's going to be. And rely upon them, because they're seeing way more than you will ever have a chance to. So remember, it's a team game.
Everyone, if you have additional questions, our speakers are actually going to go upstairs by the green couches, so you can ask them your personal questions. On behalf of Business Law Society and Real Estate Law Society, we'd like to thank our speakers.